All right, welcome everyone. We're going to do another video. Today's topic is going to talk about business income and expenses for rideshare taxes. So, have a client that has been working for Uber this year, and so had a lot of questions around, what's income, what's deductions, and all that. So, we're going to kind of tackle these and going to use the old whiteboard. So, first thing that we want to look at is our financial statement. When we have a financial statement, when we go to do taxes, we need to know what our income is and then what all of our expenses are. This is kind of key here. So we're going to get our income from the ride share. We're going to pay out some expenses. And then at the bottom, we're going to have our net income or our loss. And this is what we're going to be paying taxes on. So we need to kind of think about it at first. We don't have any entities set up. We're typically, when we start doing rideshare, we're just considered independent contractors. So we're just going to put IC here. As an independent contractor, we have to pay our own taxes. So responsible for our own taxes. So what that means is when we collected a W-2, when we're an employee, we had our gross wages and then employer withholds taxes and then we get what's left. So I just have a daughter, she's 15, she just started her first job and we're waiting for that paycheck to come in, that first paycheck that she'll ever earn. So I get to show her how much taxes the government took from her paycheck. So she was thinking she was going to get 200. Government's going to take, say, 20. So she's going to have $180 left, right? When we're 1099 income, we're independent contractors. We make our income, but we get the full gross amount of our income. So we still have to, at some point in time, pay our taxes, which is usually done on the tax return. So we're going to look and see what our net income, our net loss is, and then we're going to calculate out our self-employment income or our self-employment taxes as well. So when we get to this, I have a client and he just sent over his 1099s. So he got a 1099 NEC, and then he also received a 1099K. So both of these forms are going to be reported as income on the tax return. This income is going to be reconciled through a Schedule C on your tax return if you haven't set up any entities. I'm just going to show you what those forms look like. So a 1099 NEC is this one right here. And then when we go to do taxes, we always want to make sure what year is on the form. And so we have the year right here, 2024. And what's going to show on this is it's just going to come from Uber, and that's going to show you down here. And then in this box right here, it's going to show what your independent contractor income is. Now you can see on this form, there's no taxes that are being withheld. So you're going to see in these forms that there is no taxes being withheld. And there's definitely no Social Security and Medicare taxes being withheld. So at some point in time, we have to pay those taxes, which we're going to do on the tax return. This Uber driver also earned a 1099K. And down here, it's going to list what the total amount is. And then it's also going to give a summary down here for each month that the income was earned. And then this right here would be Uber. This right here is going to be you. Okay, so that's what those forms are going to look like. So when we go to do a tax return, we know what the income is based on the 1099Ks. And you'd want to get these statements for any company that you drove for. So if you did Uber and then you did Lyft, you want to get all your 1099 NECs, all your 1099Ks, and have those ready to do your taxes. And then I just went and pulled this. So you always want to make sure that we're getting our expenses. So when we looked at our financial statements, we also get to deduct our expenses. And so this will be just a sample sheet that Uber would send you, but you can see that on the expense side, there was an Uber fee adjustment. There's a booking fee. There's a split fare fee. There's insurance. There's instant pay charges. And these would be all your total expenses. So when you're going to do your taxes, you want to make sure that you're writing these off. So that's $3,021. So those expenses would be down here, $3,021. Now, this isn't all your expenses. We're going to talk here in just a second about all the different type of expenses that you can write off. But these forms are super important because they help give us what some of those expenses are. So that's $3,000. We don't want to forget those expenses. Okay. And then what we're going to do is we're just going to do another little whiteboard here. Let's do a new slide. And now the biggest thing is, what are my common deductions that I can take as a ride share business? So the first one that I'm going to look at, because it starts with A on a tax return, is my auto deduction. So on auto, what we're going to do is we have two different classifications. We have two flavors of deductions for this. We have A, we can take a standard mileage rate, which the IRS publishes, or B, we can take our actual expenses. Now, when it comes to these deductions, it's not a one size fits all. It always depends on your tax situation. So that's why I say you always use a tax professional, because they're just going to know a little bit more than you, as unless you're going and you're studying the tax law and all that. But we usually, look at it. K, we want to look at the vehicle. Did we purchase it? Did we lease it? Those are important. What's the weight of the vehicle? Is it 6,000 pounds plus? Is it under 6,000 pounds? Do a little negative there. So we want to start to look at these. We want to look at the purchase price. So what I'm looking at on this, so purchase price. So if I have a high value purchase, it costs me a lot of money, and my business use percentage is pretty high, then maybe I look at actual. If my purchase price is pretty low, so maybe I only paid 10,000 for the vehicle here, and I put a lot of miles, lots of miles, I'm going to do standard mileage. If I paid a lot of money and maybe less miles, then I'm going to look at actual. And this is not 100% set in stone. It's just kind of an idea how I look at things. Okay. But most important, you need to keep a mileage log. This mileage log is going to keep a history of the use of your vehicle. So in each of these deductions, that if they're not bought in a business name, we need to know the business use percentage. Okay. So super, super important. That might need to be an area where you have a little bit more learning. And then next, some of the deductions that I would look at is, I'm just trying to think here. Cell phone. I'm in my car, probably using my phone on my dash for directions. I'm thinking about, if there's any insurance that I have to cover to run my business. I'm also looking at supplies. Maybe I bought some water bottles or some snacks for drivers when they hop in my car. When drivers do that for me, I super appreciate it. Because sometimes you've been on a long flight, you're just a little bit thirsty, you don't have time to just sit down. So those things are always nice. Maybe any licenses, permits that I have to do to operate my business. So this is maybe 4 or 5 deductions here. My main one that I'm always interested in is making sure I get my automobile, making sure I get my cell phone, making sure if I pay any insurances I'm covered, supplies, licenses. So you guys will know a little bit more as you're out driving around what expenses that you have. This list is not just limited to 5. You're going to have hundreds of deductions. Maybe something you're looking at is, hey, meals. Maybe I get some meals deduction. We just got to make sure we're following the rules on that. Travel, maybe, maybe not. Uh, just trying to think. Car payment. Car payment can be a little bit tricky, depending on how you're treating things up here. So these are all questions that you would have that you want to make sure that you're getting answers to when it comes tax time. So the biggest thing is knowing that you can write off all these expenses. Because when we go to look at filing our taxes and paying taxes, we look at the net income side but we get to earn our money. We get to spend our money through those common deductions, and then we get taxed on what's left. Where up here, as an employee, I earn my money, I get taxed, and then I get to spend. So the tax system favors the independent contractors, the business owners. So I highly recommend working with a professional. I see so many people that miss out on these deductions, which gets to lower their taxable income, which puts more money back in your pocket. So this is a video for rideshare, any Uber drivers, Lyft drivers, etc. This is stuff that you need to think about when you get ready to file your taxes. All right, guys, we'll catch you on the next video.